Hey, good morning. Let's go over today's trade plan. So, as explained in yesterday's recap video, we saw a balanced breakout yesterday, and it was happening on decent enough volume, broad market strength, other markets participating in the move, NASDAQ pushing to new highs. So, there were no red flags on yesterday's breakout, and everything was setting up to be quite bullish, at least in the short term. And we've seen that theme continue in the overnight session. So, we got a very modest pullback towards the 52.5 high volume node, and from there ES launched higher into the 64.75 to 65.75 pre-market resistance, and now we are approaching larger time frame resistance at 67.5 to 70. So even though the short-term bias is now bullish and the buyers are dominant and in control, we are now running into larger time frame and stronger areas of resistance. So 67.5 to 70, the 72, 75 high volume node, 71 gap, that entire range, that entire area is larger time frame resistance, and it can be a hurdle on the way up. So even if we are eventually going to head higher and test higher prices, in the short term, the initial resistance zone and all the way up into the 72, 75 high volume node, this is an area where it may take some time for the market to go through it, and it's very unlikely that ES is just going to slice right through that zone. Most likely we will attract responsive sellers at initial resistance and ahead of 72.75, and then establish perhaps another balance, consolidate, kind of process yesterday's breakout, and then perhaps head higher. So of course we still have to use stops and manage our risk accordingly. In the event that something odd happens or something low probability happens, like a move right through initial resistance in 72.75. But the more likely scenario is that sell side will be active here at 67.5 to 70 up into 72.75, and ideally the initial resistance zone holds. Just breaking through initial resistance in itself would be quite bullish, especially if we don't get a decent reaction off that zone first. So if we just go through that zone, that's the launching point of that big directional move that we got a couple of Fridays ago here. So ideally, we want to see the market holding initial resistance, and in the event that it goes through, the next important area would be 71.75 to 72.75 with that big high volume node there, and the expectation would be for sellers to be active. Beyond that, the market starts getting quite exhausted, and again, sell side can be active at 75 quarter, 77 quarter, and the resistance zones above. But the primary scenario is going to be for the S&P to hold at initial resistance, or worst case scenario at 72.75, and then start balancing again and pulling back for perhaps even a retest of the 56.58 pre-market support, gap fill. You have initial support at 52.54. Now, when the market enters more of a bullish phase, typically you won't get too big of a retracement, but a pullback to 56.58 would simply be a test of last week's RTH high, the breakdown area that we had before, the gap fill. So it's not really a big pullback by any means. The real solid support at this point is actually down at 44 to 46.5. That's the actual breakout area. And if we start getting some stronger rejection off the initial resistance or the 72.75 HVN, then eventually, even retesting a bit lower than 52.54 would not necessarily be out of the question. But right now, what we do know is that in the short term, the buyers are in control. The short-term bias is bullish, but because we are running into larger time frame resistance, we're expecting a response there. But we're not bearish on the market short term. The bias is bullish. The buyers are dominant in control, and that's why even if we are taking short setups at initial resistance or higher, we're not necessarily looking for a major failure. We're just looking for a response off the zone. But because it's a larger time frame area of resistance, it doesn't have to be just a minor 5 to 6 point response. It could be a 10-point response off initial resistance and the areas above, and then the market can go into another balancing phase. And then on the downside, if the market's getting exhausted into support, especially something like 52, 54, or in the event of some real selling, down towards 44 to 46 half, that's going to be a place for buyers to be active, and we'll look for long setups there as well. So those are the main ideas heading into the open. Let's see if the larger time frame sellers can step in here at initial resistance and 72.75, and we'll take it from there.